Hey everybody, Smart Silver Stacker here. It's that time of year again, folks, the time when we begin hearing about the US debt ceiling. And Janet Yellen just warned of the potential dire consequences of a US default on the national debt. But make no mistake about it, regardless of the passionate debates that we are likely to hear in Congress from both sides of the aisle, the debt limit is going to be raised. There is no way that any of the politicians in Washington want to have a US default happen on their watch and have the consequences of that pinned on them. So it probably doesn't come as news to anybody who watches this channel regularly, but the debt will continue to grow. But in today's video, I want to talk a little bit about the unfunded liabilities, because really that is a number which absolutely dwarfs the current US debt. And at the end of the day, those obligations are more reflective of how much money is actually going to have to be created and how much inflation we're likely to experience before this whole thing falls apart. So let's take a look at those numbers and let's think about what it means for the value of the dollar and also for precious metals like gold and silver. Thanks for tuning into today's video, everybody. I hope you enjoy it. If you do, please do give it a big thumbs up down below. And while you're at it, why not subscribe to the channel? Today's video is brought to you by ST Bullion, my preferred precious metals dealer. You can check them out with the link down in the description. Okay, so this is the warning that we received from Janet Yellen just a couple days ago, that if Congress does not take action to raise the debt ceiling, then the Treasury is going to need to take extraordinary measures to prevent a default on U.S. debt. And according to Yellen, existing cash and these extraordinary measures will be exhausted by sometime in June. And so it is fairly urgent that the Congress act and raise the ceiling. Now, over the next couple of weeks, you probably are going to see a bit of a dog and pony show in Congress. There will be debates on whether to raise it. The Republicans will be trying to exact some kind of spending cuts from the Democrats, but make no mistake about it, both parties are committed to increasing this debt and to spending, and they will raise the ceiling because nobody wants to be at the helm when the U.S. defaults on the debt and have to, have the consequences of that pinned on them. It's just how politicians are. So they're going to raise the debt ceiling. It's the easy thing to do. The $31.5 trillion that we're at, let's take a look at the debt clock. That's not really the whole picture because, yeah, the $31.5 trillion is a huge number. We are increasing that number at a record pace, the deficit almost at $1.6 trillion now. But I want to draw your attention down to this number here, the U.S. unfunded liabilities, because truly this is a number that dwarfs the national debt. And it actually includes the national debt. You can see this number is at $173 trillion. And what this is, it includes Social Security, Medicare, the federal debt held by the public, and federal employee and veteran benefits. And $173 trillion, it's an absolutely staggering level of true debt, because while this may not be money that we've borrowed yet, it is money that we are going to have to borrow to fund programs that already exist. It doesn't even include the future spending that we're likely to see. This is just stuff that we're already on the hook for, that the federal government is eventually going to have to pay. And at $173 trillion, there's really only one way that this can get paid, and that is through debt monetization, through the printing press, and through the Federal Reserve, unless you want to have a real debt default. But the thing is that a debt default would be very politically unpopular. Cutting spending on any of these programs would be very politically unpopular. I mean, you start talking about cutting Social Security or Medicare benefits, I'm sure some of you out there are probably sweating just at the mention of such a thing. And despite the fact that there's no money to fund any of these programs and they're likely to be paid out in worthless, devalued currency, that's not what the voters want. They don't want cuts to these programs. Everybody likes the idea of cutting government spending until it cuts into a program that they're drawing from and that affects them. And so this is going to be funded with the printing press. And to give you an idea of the scale of the U.S. unfunded liabilities, we can take a look at the chart of the M2 money supply. And right now it stands at about $21.3 trillion. Now, this includes all of the cash in circulation, and M2 also includes some slightly less liquid forms of cash like certificates of deposits and money markets accounts. But this gives you an idea of how much money is out there in circulation. So we're talking about multiples of the existing money supply needing to be conjured out of thin air and spent into circulation in the form of all of these entitlement programs and benefits. And an even more important ratio, I believe, to examine is the ratio of these unfunded liabilities to the amount of actual hard money that we possess here, the U.S. gold reserves. And this is a report from the Treasury. Now, this is from February 28th, 2021. But as far as I know, the U.S. gold reserves have not changed since that time. And officially, we do have the largest gold reserves in the world. And right now, they sit at about 261 million troy ounces. To be specific, it's 261,498,926.241 troy ounces of gold held in reserve. And so to give you an idea of where the gold price would need to be to back up all of this spending, we can do a little bit of quick math here, and we just take the unfunded liabilities. So that's $173 trillion. We'll round, we'll drop off a couple of billion there just to give us a nice even number. Oh, I need 3 more zeros. And then we will divide that by the gold holdings. So that should give us an idea of how much gold we have relative to how much money is going to need to be created. And you can see that you would need a gold price of $661,000 plus a little bit more, actually. That's rounding down, in order for the gold reserves that we have to back up that level of spending, which ultimately will have to take place. Now, I'm not suggesting here that this is like a price target for gold or anything. It just gives you an idea of the ratio of hard money to the obligations that we have and how astronomically different they really are. I mean, at the time I'm recording this video, gold is slightly above $1,900. So you're talking about like a 300x increase in the price of gold. Say if you wanted to pay these obligations in hard money. And I know there's people out there who say, oh, there's no way that you could have the money supply or the obligations or the debt backed up by gold or paid in gold. And the answer is there's always enough gold. It just depends on the price, right? Because the amount of gold is like a fixed thing. You can always have enough gold to back up any amount of money. You just need to value the gold appropriately. But like I said, I'm not suggesting that this is a price target for gold, although, it's not outside of the realm of possibilities. And of course, if you do get something like a $600,000 price for gold, it means that you've got bigger problems than the price of gold. I mean, it means that we've gone into some kind of a hyperinflationary collapse. But the way that we are spending and accumulating debt, that's not outside of the realm of possibilities. And I know there's a lot of normalcy bias out there. I think people just think that sort of thing can't happen because, the whole time they've been alive, the economy has been functioning a particular way. But listen, these things have happened numerous times throughout history. The U.S. is no different. When empires get too big and they overspend and they engage in the amount of government largesse that we have, we've done it on a scale that's almost unprecedented, then fiat currencies can collapse. And if the dollar were to collapse, if we were to go into some kind of hyperinflationary spiral, I mean, $660,000, it's not even the top for where gold could go, because ultimately, when you price gold or silver or any kind of hard asset in a purely fiat currency, the ultimate high end for the price of that commodity is infinite, because you can create an infinite number of dollars. I mean, think about if we transition to some form of a digital currency. I mean, you're not even talking about the printing press anymore. They just create more out of thin air and distribute them digitally to people's wallets. So, that is something that is potentially on the horizon. And unless the government is able to stop raising the debt ceiling and balance the budget and get this spending under control, that may very well be likely where we are headed. And, one of the reasons that we are going to probably see some kind of an outcome like that, where inflation is going to get a lot worse than it is right now, is because inflation is the most politically expedient way to fund this level of spending. Nobody wants to have their programs like Social Security or Medicare cut, but at the same time, nobody wants to have their taxes raised. And ultimately, when you start talking about $173 trillion in unfunded liabilities, and that's unpayable with taxation. There's not enough money to extract from the taxpayers. Look at the liability per citizen here, $519,000. I don't know about you. I don't have $519,000 laying around that I could hand over to the government. And that's per citizen. Keep in mind that a lot of citizens don't pay any taxes at all. So if you start talking about the liability per taxpayer, I mean, it's in the millions of dollars, and there just isn't that much money out there. So ultimately, unless we see a significant cut to the size of government and the size of these entitlement programs, and I know a lot of people out there are going to be screaming at me, Social Security is not an entitlement program. I paid into it. Yeah, well, that doesn't matter. The money's not there. And there's a lot of people who draw from Social Security a lot more than they paid in, and that's just how the program is set up. I didn't make it, so don't get mad at me. It's like Alan Greenspan said, we can guarantee cash payments in any quantity, but we can't guarantee their purchasing power. And that is very likely how things are going to play out, because politicians, they're going to keep raising the debt ceiling. Nobody wants to hit the brakes on the spending. It's not popular. Nobody wants to raise taxes. So what they do is they fund things by inflation, which of course is like a regressive tax that hurts the poorest people in society the worst. Anybody on a fixed income is going to really suffer under the inflationary situation that we have coming, because you're going to get your benefit checks, you're going to get your payments, but they're not going to buy very much. And at the end of the day, what really matters is how much the benefits that you receive can purchase, not how much, the number is, not how big the number is on the check. And the government can't create goods and services. All they can do is kind of move money around and create it out of thin air. And at the end of the day, all their micromanagement of the economy and all of this central planning and all of this debasement of the currency, it actually hurts the supply of goods and services. It inflates the supply of money. So, for all the talk we're going to hear about the debt ceiling going up and all the arguments out there back and forth, whether it should or should not be raised, that's not really even the problem. The problem is that the government is bankrupt and they're on the hook for a lot more money than is even possible to raise via taxation. And I don't know what it is that prevents people from seeing this. I guess there's an element of normalcy bias. I think there's a bit of a concerted effort to pull the wool over people's eyes about what's going on with the currency and where we're headed. But when you look at the numbers and you look at the math, it's not hard to understand that the dollar's days are numbered. And unless things change in a very big way, we're headed for massive inflation. So let me know what you think in the comments down below. Let me know if you actually think it matters whether they raise the debt ceiling or not, if any of this political grandstanding actually means anything, or if you're on the same page as me and you think it's all just a distraction from what's really going on. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.